Good morning, everybody. Welcome to the Flow Show. This faux Monday. It's Monday for us lots. We had a bank holiday here in the UK. Tuesday for the rest of you. Hope you're doing all right. And those who had a good break, long weekend, had a nice one. Morning, Kay. How's your weekend, mate?
Morning, mate. Yeah, all good, Ryan. Thank you. Good morning, everybody. It's windy in our part of the world, huh? Wasn't that nice yesterday, to be honest?
No, it got a bit cool yesterday. I was out for a
Yeah.
walk with the family, and yeah, it's definitely blowing up a bit this morning. So yeah, still in my shorts though, so don't care. It'll be me till November at least in my shorts. That's the way we swing. Right, let's get cracking over what's been going on. But before I do, we are still running our Liberation offer. I know several people have been taking advantage of this offer. More than several people. We've had a lot of new people coming into the chat room, which is nice to see. Some new names, new faces. So take advantage of that. Still 40% discount running. It's not going to run for much longer. I don't actually know when it's going to expire, but might even be today. I don't know. I'll have to check with the bods behind the scenes to see when that's expiring, but take advantage of that as soon as possible. And speaking of members, it was nice to meet one of our roomies, Rahul, Main King, who comes and follows us here at the Flow Show. He joined us on Friday for a little drink up, which was very nice down by the river. So nice to speak to him and find out what makes his trading world tick. Right, anyway, let's crack on with things. I'm going to start with some bits and pieces in the data. It's PMI finals day for many countries and also some first numbers out. China services PMI coming in at 50.7. This is the Caixin number, not the national number that the Statistics Bureau number. So 50.7, a slight softening there by a point, and going backwards more on last month as well. Then we come into Europe, Sweden there having a bit of a wobbler as well. France industrial production looking a bit softer, though still positive, just about. Spain's unemployment change down 67.4 thousand. But their services also went backwards more than expected, 53.4, still in positive territory, but not doing as well as the 54.7 previously. Italy as well, shown an improvement, 52.9, much more than expected and higher than last month, was expected to go backwards a bit. There's been improvements pretty much in the rest of Europe as well, although some of these numbers are still in contraction, like France. Well, they beat expectations and their flash number went up a bit, but it was still negative over last month. Germany as well, they still went backwards but improved over their flash number, so a little less crappy than they started off. Then the pan-Eurozone number just edging back into expansion in the final number, driven higher by those improving numbers there. UK as well, seeing an improvement to the flash number, but not doing much to turn around the loss from last month, still in contraction. So on the whole, better than the flashes, but still down on last month. Eurozone PPI as well, coming in a little bit softer on the month, down 1.6% versus minus 1.4 expected. Also year on year coming in less than expected at 1.9%. So a little bit of disinflationary pressure coming in for that. Right, back to the news front. And in China, PBOC's PAN has called on Asian nations to work against US tariffs, trying to get all their mates together, draw up some support. There's been a lot of chatter going on right now. I'm probably going to ask Kay about this in a minute, as he was around and about yesterday. There's been a lot of movement in Asia FX, the Hong Kong dollar being one of them, forcing the HKMA out and about, buying dollars versus their own currency, selling their own currency to the tune of a record $7.5 billion there to keep. I'll show you what I'm talking about, because they run a price band 775 to 785, and they were hitting that today. So that's forcing them to intervene there. There's growing talk, as I say, of Asia potentially moving towards devaluing their currencies, some currencies, to cope with whatever tariffs that are coming around. We've seen the Taiwanese dollar as well reacting to that as well. Overnight rates blowing up a little bit over there as well. So this is something that can happen now and again. We get this sort of chatter going on. Causes people to talk about things like the Hong Kong peg breaking. Kay, has Carl Bass popped his head above the parapet yet?
I haven't seen what he's been doing lately, but it's been it's been quite strong, that move that we had on the Monday in the Asian currencies. There was some chatter that Taiwan could get away with stuff, which probably had the market saying that, oh, it may not be as bad, but it was really a pan-Asian move that we've seen, and as well the Taiwanese central bank was intervening too. So yeah, I think it's going to, perhaps those people looking for those competitive devaluations are just not getting it. I know, as you are on the Hong Kong dollar there, we've tried it a few times to go for break trades on that dollar Hong Kong, but the HKMA is still there. I was talking about that briefly yesterday, and since China and Hong Kong are now that famous one country, I just wonder for how much longer HKMA and the PBOC will be independent, let's say, or at least how much the HKMA still has to, ha how much leeway they still have. I think it's an interesting question to ask for the future, because I can't see if they are really one country now, why they should still be having two different currencies. There are many reasons, of course. I mean, trade and things, and Hong Kong has still, in some ways, a different status than some of those Chinese banks and financial institutions. But I'm wondering for how much longer this is going on.
Yeah, they're almost keeping Hong Kong like a principality sort of
Yeah.
thing, aren't they? It's sort of like they're because it was a westernized economy, and they want to open up to the West still. Apparently, that's sort of their gateway, I think,
Mm.
to doing that. So if they want to go backwards, then they bring Hong Kong right into the fold. If they want to open up, they keep it open, and that's their sort of arm to do it. But yeah, it's interesting, and you always get talk about pegs breaking, particularly this one when we're touching the edges, and there's some big
I-
news around. But
mm.
we shall see. You
There's
can never
one.
say never.
Yeah, there's one thing as well. CNY is now the strongest in a long time. CNY, then oh, is that a correct?
Yeah, I think so.
Is
Well,
that a
yeah,
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 probably. But anyway, I mean, yeah, CNY is the strongest in a good few weeks as well, and it may just be because if you are China, and for that matter, probably the other Asian countries as well. I'm not sure that you want your currency to start strengthening now, when you need to diversify away from the US, try to bring other blocks like the EU, etc., closer to yourself. Do you really want your Chinese? You want to start strengthening now, although yeah, the financial markets are still a very different ball game, but I'm not sure they're going to let it go too far. This strengthening of the Chinese yuan and potentially other Asian currencies as well.
yeah. I suppose it depends whether they're selling out of US debt, which obviously then makes them
That's
long
what,
dollars.
yeah, that's what the other talk of the town was. If you sell your US debt, you sell the dollars versus because you're going to get dollars, right? So that's the other thing. That is likely going on somewhere in the market as well. On the other side, if you look at the sheer numbers, which are delayed, obviously, but if you look at the sheer numbers, there's not been a massive move out of US Treasuries yet. Whether it would be China, perhaps a little more, but for sure not like countries like Japan, for instance.
Yeah, yeah, absolutely. It's definitely going to be a situation that we're going to need to keep an eye on, as we always do. So yeah, very, very interesting times. Meanwhile, China are up to shenanigans, apparently, according to the FT. They are undervaluing exports to try and swerve Trump tariffs. No shock there. Good job or good luck to the US for trying to pick through all the exports or that become imports into the US and working out the value of goods. But that's what China's doing, apparently. And the Chinese Foreign Ministry is all playing nicely with Europe, saying, as agreed by both sides, China and the European Parliament have decided to completely lift restrictions on mutual exchanges at the same time. They're trying to definitely pal up with Europe as they get away potentially from the issues with the US. The US, not good news for Japan. The US has apparently rejected Japan's call to be exempted from reciprocal tariffs. That's according to Kyodo News overnight as well. So Japan wanted to, again, swerve some of the things the US has slapped on them, but no dice, it seems. We got fun and games in Germany and German politics. So yesterday, the German CDU and CSU and SPD parties finally signed a coalition agreement, and that was prompting Merz to take over as Chancellor today. Apparently, according to Bloomberg, he wanted a very fast start as new Chancellor. Well, that ran into a bit of a brick wall this morning because the vote in the lower house saw him falling short of the majority needed to become Chancellor. This was in the first round of voting. So it's basically gone cups and saucers in the air as far as German politics goes. They have potentially not got a Chancellor. There may be a second vote, but it's not happening yet. The worst case outcome is that this could all head to another election. It's up to the president to pick, or whoever he is, the leader, if he can get one. Otherwise, we're going to a general election again. So Mr. Merz, just short of doing a victory lap, has fallen flat on his face. No real move. Well, there was a little move in the Euro, but it's no biggie really. Kay, there's all sorts of shenanigans going over there, and we still haven't got a government.
No, but the finality, if they don't get enough votes like this, the finality will probably be that the just the one with the most votes will form a government. But yeah, I mean, usually in Germany it goes a little bit more easy, but now the opposition is playing a bigger role as we see in many countries now. So it's not that easy. But I do think they will find somewhere a way to get it through. It is, yeah, it's probably one of those things where you have to keep an eye on, because Germany being such an engine, or a sputtering engine right now of Europe, it is something that we need to keep an eye on, because if you can't get your act together in the biggest country in the European Union, it can have some ripple effects. But I think for now we have to assume that they will get to some sort of an agreement at some stage.
Yeah, want to keep an eye on, but never dull moment in Germany. ECB Stornois doesn't see inflation if the EU tariff reaction is selective. We've also had the SNB chairman Schlegel out saying we are committed, or we stay committed to our mandate of price stability. He's still going around pumping that they're prepared to use FX and negative rates if need be. That's not, those lines are pretty much constant repeats now. June is the next SNB meeting. Kay, are they getting a little bit worried over there? What's going on?
Well, if the market continues to buy Swiss franc, they're probably going to go to zero, and for a starter. The, the thing is, they will, if they intervene in the FX market, it's not going to be, well, 90% probability. It's not going to be them coming in and say, like, I'm buying dollar Swiss or I'm buying euro Swiss and I'm taking it a big figure or two big figures higher. They're probably going to sit on the bid somewhere. But those interventions are to smoothen the moves, not to really weaken the Swiss franc. If they really want to weaken the Swiss franc, they probably will have to go into negative interest rate territory as things stands right now. It all depends how much this market is still buying Swiss franc, right? It's really the okay, yen in parts as well, as we have seen on equity market flows, etc. Much less on interest rates flows, the safe haven. But seems like really the Swiss franc is capturing everything. Well, besides things like gold, of course, but in the currency markets, looks like the market is really concentrated on the Swiss franc now in as a safe haven, and obviously the SMB doesn't really understand it or doesn't really like it because you've got a currency with virtually zero interest rates. You've got inflation flat. You've got growth, which is also started to sputter. Those are not things that in normal times would drive the market towards buying your currency. So I trust they don't like much of what they see now.
Yeah, very much so. But yeah, we'll see what happens with those guys. I mean, yeah, as you said, inflation never got off the ground like we saw in other countries, and rates never got off the ground like elsewhere. So limited room for those guys at all times. Right, going back to some data from yesterday out of the Americas. We had some PMI numbers there too. Canada's services PMI going up a tiny bit to 41.5 from 41.2, but still heavily in contraction. Then we had the US S&P Global final number 2, which came in bit of a wobbler at 50.8 compared to the 51.4 flash and 54.4 previously. But then out comes the ISM, and it looks a different game altogether. 51.6 for the main number, so it went up 8 points instead of going down 6. Prices paid also jumping 65.1. Employment went up as well, although it still remains in contraction. The orders up 2. So good numbers from the ISM, again going against some of the other surveys, but Kay, it's more data that says the US isn't rolling over just yet.
Exactly.
Although you wouldn't know that by the dollar.
Absolutely. It's not rolling over yet. It had a limited impact, though. Seems the market is really looking for something fresh to happen now. We've seen pretty similar reaction after the NFPs. Dollar got bought, then sold off again, then got bought again, and we are back. We are back somewhere in some currencies where the dollar is even a bit weaker, like yen and stuff. But we're kind of back where we were, and asking the question about what's going to happen next. Yeah, I'm not sure what to think about it, and I said rather same thing yesterday. If I have dollar positions, I'm very inclined to rapidly take parts off, because I'm not out of where the next move will come. My global bias is still to see it trade perhaps over time a bit lower, but it's not something where today I'm really confident in calling a clear direction for now. Regarding those employment data that we saw, by the way, there were some articles and persons in our room brought that up as well, is that the all the big layoffs in the government that Dodge came up with, a lot of those people will be paid until August or so. So we
Yeah.
may still have to wait in the employment data to really roll over until we are well into the summer. So all of that is like kind of telling me or making me wonder what the next move will be and how those next data will look like. And that pushes me to be cautious on really picking a clear direction right now for the dollar.
Yeah, I think it was even touted September for some of those government workers, depending on what packages they got and whatever. So yeah, but even so, we still know it's a known unknown. So if we do get a wobbly one and it's all in government jobs, the market's probably going to brush it off. It's if we get a wobbly one and there's no movement in government jobs, that'll be the one that the market goes bonkers over. But we will have to wait to see if that happens. Mexican President Scheinbaum says we have had good communication with Trump and we have reached deals. So still some of these deals waiting to pop out. Still waiting to hear of some pen being put to paper on a lot of these deals. Treasury Secretary Bessent says China is the biggest piece of Trump's trade puzzle. Expects even stronger trade ties at the end of the current process. Says interest rates will come down if we can take away the credit risk of the US government. Good luck with that one. Lutnick was out as well, saying trade with China, with Canada is really complex, and he doesn't see how a Trump-Carney meeting works out perfectly. They're said to be meeting on Thursday, I think it is, Trump and Carney. Trump, meanwhile, has been moving on from trade stuff. As you probably all heard, he's looking at potential film tariffs and also pharma tariffs he's going to take a look at. He's putting some executive orders through to sort of deregulate the pharma industry in the US, make it easier for home production there. So that's next coming up. You'll remember that there's probably a long line of things that Trump wants to tariff and get back to being produced in America. It's not just trade, cars, autos, metals, whatever. There's lots of different sectors and items he's going to be looking at. But we'll see what deals get done. Right, that's all I've got on the headline front. Canis, is anything from yesterday crossed your wires?
I think we covered them. We covered most of them.
Cool beans, cool beans. All right, well, let's move on, have a look at some pricing. Now, I've only been off a day, but I'm seeing a lot of similar patterns going on in some of these charts, which you would have seen as well. Some big moves, in this case, big moves down, some bounces, and then reversals. We're seeing that in things like dollar yen as well. We had the big move down, the big reversal last week, and now we're coming down again. This is a coin of phrase for this one. It's like a Newton's cradle going on, okay, where we have bad news. We had a lot of bad news in April, caused this leg lower. Then you get to the point where the market pretty much has traded out all the bad news, and unless it gets something even worse, then it struggles to continue that move. And then we've had a bit of easing and we get a bounce. But when you come back to reality, what has changed? We still haven't got any trade deals signed. Yes, we've had some easing tones, potential threats being de-escalated, China, whatever you want to look at it, and then the market goes the other way. But then that's got a limit because, as I say, there's no pen hitting the paper. So the market is in that position where it's got no fresh bad news to make new lows. It's got new, real, fresh good news to make or carry on going higher. So we end up doing this ping pong stuff in between. Probably see something like a bit of a wedge developing in a lot of these pairs. Stocks being another one. Strong rally, but it's run out of steam already because the market then needs fresh impetus to keep it going in that direction. As you can see here, we've been a little bit softer. We're not getting through these highs again for the moment. So this is what you've got to look for, because what happens here is that traders get caught out. Everyone's been bearish, 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 and they don't see when the market changes. And we were pointing this out on the flow show last week, particularly with dollar yen. The market has slightly changed, might have turned the corner, it stops selling dollars. Okay, but everyone thinks, well, nothing's changed, I'm going to keep selling dollars, and this is where it becomes difficult for traders, because now you see this move and you think everything's all right with the world. I need to be long, and then everyone starts piling in long. They've missed all this move, they're in at the top, and then the market says, well, we need new use now to keep going higher, and then it reverses. So you've got to be very careful. I think we're in that position at the moment. We have nothing different. We do not have any trade deals yet, and we need to see if we do get the trade deals dropping, is that going to be enough to keep the positivity going? Otherwise, all we're going to find is a bit of zigzag price action going on. Not quite ready to go down, not quite ready to go up. And I think that's where we may be heading for the short term. But as everything, you've got to look at your levels and see what ones are important, what ones are going to tell you what the market wants to do. Dollar yen, the old levels are back in play. We had this bust up to 146. We came back down below 145. Wallop, 145 is resistance. Now we might be seeing what happens if we get another move down to 142 in this zone here. If it holds it, great. Keeps this move going, but then it needs to take on that 145. So as I say, we could be up for a bit of zigzagging going on here at the moment. It needs some big news, okay? It needs another catalyst to get us moving. So until that happens, then you can potentially look for range trading. What's your thought, just generally, Kate? Well, you said most of it when talking about the data, but it's tough for some traders to see these switches in sentiment, because it can go a bit like a light switch.
The thing is, when we are in ranges like this and the market is waiting for something concrete to get its teeth back in, the overall sentiment hasn't changed, because otherwise, towards the dollar, for instance, because otherwise we would be back at 110 in the euro dollar, we would be back at 148 dollar yen, etc., 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 130 in the cable. So the overall sentiment hasn't really changed, but inside this, we are waiting for fresh impetus, and it's the trick is not to start looking for changes in trends when we see moves like this, because those moves have been already telling us that there is we are in those ranges. Then we overshoot a little bit, then we come back down, and then we go back up. We're seeing it with the euro dollar, but then you have to get back to your bigger picture and just look where we are. And let's say, for instance, in the euro dollar, you're above 112.2070, which is a big support zone that I have. Yeah, people say it's like 112.5, but I think it's even going down to 112.20. But anyway, you're still above, so that means the overall picture hasn't changed. But do we have enough strength to go up above 115 for now? Probably not, because we are waiting for those kind of things, and that's where you see those swings inside that top end range that we are in now. But we are going to continue to swing, because the bond market, the even producers, the hedge funds, they don't see anything fresh either, but they want to take advantage of ranges. They play the short term as well, but we are not going above or beyond those ranges. We have to avoid, as retail traders, to start to find or to start to look for new trends every day, because as in the good old days, at least, we were saying, like, well, the market is in ranges 80% of the time, and actually, if you look at your charts and you zoom out a little bit, it is very true. So the thing is to not go and look for new trends until those bigger levels break, and that, I think, is where I am, at least, at right now as well. Some currencies are going to do better than others. You have those different sensitivities in markets, and but then you look at the crosses, how one currency is doing versus the other, Like for instance, cable is doing better than euro dollar right now because euro sterling is coming back down. So all those kind of things, you can trade those, but don't go look for big changes or new trends, particularly in currencies when they are not there yet. So don't get carried away is really the short version.
Yeah, absolutely. And you have to know what trends you're in. You know, dollar yen is the perfect example. You look at this, we're in an uptrend. It's looking fairly decent. We've gone from, you know, pretty much 140 to 146. That's 600 pips. But we haven't even put this to the test yet, this downtrend for the year. The 38.2 of this move is up at 147. Can't even get close to it at the moment. So you're still in a very, very strong downtrend. You know, it doesn't mean just because we're bouncing here, we're going to 150. Yes, it might mean that we may have turned into a bit of a dip buy mode in the short term. We were saying that last week. But if you can't start to break the trend, then you have to watch what the wider trend's doing, because that's still very much in play. So yeah, you know, and price action is your guide. You know, I'm a potential dip buyer, was last week, but if we start going through 142, 141.70, might be the picture's changing and I'm wrong in my thinking. So I've got an idea, but I'll let the price action, you know, guide me. And as Kay's mentioned, euro dollar, you know, I don't care what happens in here. I want to see what happens at 112, 115. Doesn't mean I'm going to be nailed on to trade there. I want to know why we're moving to 112 or why we're moving to 115 before I think about trading it. But Euro's a dangerous one because it gives you those moments where you think, yeah, this is the moment it's going to break. You know, everyone's in shorts, and yeah, it's going to go, and it's going to be through 112, and then boom, you get a little extension through 113, and then it reverses on you. And the same thing up top. You get to 114, yep, it's going to go 115. You get an extension, 20, 30 pips, and bang, then it comes back the other way. So, you know, you can pick your levels. You know, we've got a bit of a level here, 68, 66. You know, you may not have this on your chart for 6 months or previously, but this is what the price action is showing you, two fairly solid holds down here. So that gives you something to lean on. If you want to trade the range, you know, okay, maybe we're not 113, 114 now, maybe we're 112, 50, 60 and 114, 25, 30. So if you want a range trade, you know, the levels are showing up for you here. And then you can wait and see what happens if you get breaks outside of those, and are they going to go to 115 or 112? But just don't be getting sucked in on the wrong way on these ranges thinking, yeah, we're down here, it's going to break. Because if it flips on you, then you're going to lose money. So it's always better trade the range until it breaks rather than just try and guess when something's going to break. Ali, you were asking about Aussie dollar. I think Mike was asking about Aussie dollar. I've just actually stuck a little bit on 43, a little bit of a long, only a tight one, stopped down at 25, just to see if it holds. I'm not overly keen on it because technically it's pretty much doing what it should do. We've had another break. It's held it. We had a little mooch under, and it's held it. What it isn't doing though is bouncing too far, and it's coming back to this level pretty quickly. So I'm not overly keen on it, but I'm giving the level a go for a little test. Now you may remember, just to go back to this one, I was talking about this pattern here in dollar yen about when you get a low, a new low. Oh, let's take that off for starters. When you get a low, a new low, and then that former low respected. Well, a bit more short term, the Aussie's doing the same thing up here. We've had that high, that breakthrough, another high, and then we're having this high respected. So it's doing the opposite of what happened with dollar yen, which potentially suggests that we're going to be coming back through this level and then maybe going back into all this noise down here. And then we have to do all the hard work again. So some of you looking at, I think Steve in our room's looking at potential short-term head and shoulders on this one. Yeah, that may be valid, but that's the price action that's telling you we're potentially not ready to go zooming off up above 6,500 just yet. But if we do make a bit of a solid support here, you know, we go on for the rest of the day, maybe another couple of sessions holding support here, then it's got every chance of moving higher. For me, the next level is the figure 65. Oh, it's going to get wonky. And then let's try and zoom it out a bit. Let's go into a daily when I'm making a mess of this. Next level for me, up around here, this area, 65, 36, 37, up to 65, 50, and that fib up there. That's my next main zone if we can crack the big figure for that. But for now, it's still making the right moves. It's breaking this trend, or starting to break this trend now. We're above the 50. Last line in the sand is at 61.8. If we're breaking through there, then we're maybe off to the races. So keep your eye on that one. Kate, I'm going to pass it over to you, sir.
All right. First of all, I want to share this one, because we were talking about ranges and things, and don't look for new trends. And look at what this is, the 10-year note future, right? In US yields, and this is what actually is happening now. You see from well, we have had like those big moves, and then the market shaking down in the futures, then up, then back down, then back up. But we are gradually trying to stabilize here, albeit in violent ranges. This is something that we've been endlessly repeating, that you have to allow for more volatility, especially looking at what the US administration is doing, the other countries are doing against it. We don't know exactly how much people want to steer away from the dollar or US assets and stuff like that. But we are within those violent swings. The range is tightening, okay, gradually tightening. That, I think, is also telling us that the market is looking for fresh clues. I'm not saying we can't go all the way back down. By the way, I still think that if we get back down to those zones here, it may be we will probably be back at 460 or 470 in the US tens if you look at the yields. But I may start to try and pick some up here. But I think the bond market is telling us that there's less amplitude in the swings, so the market is gradually stabilizing a bit and trying to look for fresh clues. Okay, so if you look at, or if you wonder why some instruments are moving less than they were before, or we are in a range even on currencies, yields and yield differentials will always have an impact. But if the bond market quiets down that bit, we can also expect to have a few more ranges on the currencies as well. Okay, gold, it's really taken off again and again. We're seeing that it is happening for the better part. It is happening again in the Asian time zone. It has to do, in my opinion, with those dollar Asia coming down, also the Middle East tensions risking to flare up again. It's never quite quiet between Israel and whoever else there, but also we had this bit of, even though it's been going on for a while, we had those potential tensions between India and Pakistan. But I think mainly it is those Asian currencies, Asian countries, and that brings me back to what I said a while back. I said, if you can't buy dollars against your own currency, but you're still not overly confident in your own currency, what are you going to buy? And I think we're back in this scenario now. Correction over. It held sort of where it had to hold, and then we successively broke back above 32 3/4, 33.10, and we are now testing this upper side resistance. We just tagged the top side the prior high we saw on the 23rd of April. So this is now a bit of a shorter term time frame, because I wanted to highlight the level where we are now. We are right in this zone. If we start to break above 33.90 again, we could be very quickly in those mid 34s on gold. If you look for the intraday support, is probably going to be around 33.50, and if we get anywhere lower, 33.20, 33.10, this zone here, it's broken up and it's probably going to act as support now. And one other thing, when you trade these kind of instruments, you always have to look at what's going on the fundamental side of what's going in, and add that to your technical picture, or start from your fundamental side. What is happening? Who is buying? When are they buying? And then you look at where your picture, where the interest may be, and also know. And we've been telling that already a few times. I've been repeating that gold is not necessarily tied to what the yields are doing. We're seeing the yields creep up. The tens, they went up like 20 basis points, and yet gold is trading higher. So don't look at that correlation right now, because it is extremely random. Okay, one day it may look as if we are tied to yields, but the other day will show you that it's actually not happening. Okay, so if you want to trade this as it is, and on the back of what is happening, especially I would say in Asia, and on the tensions side of things right now. Oh, okay, Ali. Yeah, people are from all around the world around here. So, and we are not taking any side, but we comment on geopolitical events because they impact markets right now. Okay, but I think this is what is going on right now on gold. It's a pretty thorough move, huh? Done 150, $160 already up from only from the start of May. So I guess we will have to look again at what the Asian market is doing with it tomorrow. I would say, in current context of what we see now, I don't see much to really bring it down, unless we see a big reversal in the Asian dollars. That is what I would say. Silver is much more a follower of fashion right now, but we are coming into an interesting zone there, 33 and a quarter, 33.30 on silver. Keep a bit of an eye on it. If it goes above, we can go up into the high 33s, but it's really gold, and silver is really the follower. Okay, because I've already been saying that it is going up. Yes, the metals are going up. Yes, but we need, for silver to outperform gold, at least we need a better global picture. A couple of interesting developments on the Asian currencies. On the yen pair. Sorry, we saw a big setback here on and all the yen crosses when dollar yen came down yesterday, today. But we are holding, we just tagged this here. 92.20 is a bit of a level on the Aussie yen, and then all the way down to 91.80. It should be a very interesting zone. Okay, look at there, two lows, and here banged our head against 92.20.25 here as well. Well, we are retesting it. Okay, if Aussie yen, or if the yen would hold its rise, or if we see a little bit more of this during the day in US, we should hold around 91.80, or it would be, I think, relatively bad news for all the yen pairs. Similar happening on the Kiwi yen, around 85.30, stretch it down to 85.10ish, 15, 20. Again, here we're seeing a setback on all the yen pairs, but we are getting into interesting levels that may hold. And actually, if you look at sterling yen, we're doing exactly the same. We went back into the triangle, and we are now in the process of retesting the underside of the triangle. It bounced already. From the lows. We went down to 190.40 on the sterling yen, but low 190s, keep an eye on it because it has been a gateway to trade either lower or indeed back higher afterwards. So keep an eye on those yen levels. We are coming into interesting zones. Ryan already spoke about the dollar yen. It is also coming to interesting levels. So you see all those yen pairs. If you want to steer away from the dollar, for instance, look at some crosses. They may give you a hint as well of what is happening in a particular currency, and may give you an idea to do rather a cross than perhaps a straight dollar yen if you don't want to get too much involved in the dollars. What else is going on? Yeah, I mean that Swiss is. I think it's a bit of a difficult one, especially when you talk about dollar Swiss. You see, we've got this kind of a magnet around this 82, 50, 60, 65 right now, and if you look at the cable, we are doing around about the same on cable as well. The dollar recovery stalls because the market, as we said, is looking at the Swiss as a safe haven. But um, if you look at it, really, we're in a range, Ali. If you look at 83.35, 81.88, and that is really around this hinge in this 82.55, 65. I wouldn't look for, unless you want to trade the range, I wouldn't look for anything spectacular unless we break out again of this range that we have been forming now. It's a 2 weeks range that is quite strong enough to pay close attention to but only if we go to the extremes of the range. And then Michael, yes, the dollar mix is bouncing a bit. It's bouncing off that level here. We tried to get down under that 90, 50, 53 zone, and it's bouncing a little bit right now. I think a bit more, 1982 up to 1990. Okay, that is, I think, a bit of a zone where we have to watch what's going on if we get up there. I will pay relatively close attention to that area if we get up there, Michael. Okay, so right now, tiny position myself, but I'm looking to add a bit now up there if we go up into that zone, and then we will see what happens. Probably up to 20 the figure, 2010 even, before we can really talk about a reversal. But already 1990 should be 1992 should be pretty interesting on the dollar mix, Michael. And with that, Ryan, I'm giving it back to you, mate.
Thank you very much, mate. Great stuff as always. We'll call that a show for today. Hope you all have a great rest of your day, rest of the week, and we shall see you bright and breezy tomorrow. Have a good one, everybody.